This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today's 9/28/22, show number 428. Markets are testing their lows now. Nick?
Well, we had a successful test of the June lows yesterday, and even today we woke up. The markets were basically flat. They were all over the place. But now, believe it or not, Kerry, we've got a rally on our hands. So it looks like the S&P 500 index breached those June lows yesterday, did a little back test today, and now we are making a move to the upside. Now, we have very, very oversold conditions. So in the short term, a bounce was due at some point here. And looks like we are potentially getting it today. But I will warn everybody, it's early in the session. It's not how they open, it's how they close. So sit tight. And if you're trying to bottom fish here, be very, very careful doing so.
Yeah, you're better off going to a single bar if you want to go bottom fishing. But, yeah, you know, hey, but like really the way the trends were heading, they kind of had to do something to reverse it because the dollar is going too high, BOE, pound crashing. It's just pretty amazing, huh?
It is amazing. And as you know, the Bank of England today, they said they're going to temporarily purchase long-dated UK government bonds in an effort to stabilize the plunging pound. The pound going down to 104. You know, now it's rebounding up a little bit here. The currency market in general has gone absolutely bananas. It's gone crazy. The dollar has been soaring and roaring against everything. What do you call it, Kerry? I think we call it the best house on a bad block, but I know you have a term for it.
That's called the best looking house in Baltimore.
That's right. The best looking house in Baltimore.
Or Detroit. So, take your pick.
I mean, the dollar is gaining strength against everything except the Russian ruble. Go figure, right? So Europe is a complete mess. Then you have, you know, obviously the geopolitical events going on over there, Russia, Ukraine. You have the Nord Stream pipeline explosions. There's all sorts of theories going to that. You know, Europe is a disaster, and that includes the UK, even though I know they're not technically in the euro anymore, but it's the same boat. Europe is an absolute basket case. It's a mess. And I don't even see how they're going to fix it. So you can put some temporary patches, I guess, on the pool, but the leak is still going on. And eventually the leak gets bigger and bigger until there's a bigger problem.
Yeah, well, somehow they'll shut down the pipeline, I guess. Who knows? Some kind of sabotage. There's all sorts of theories going around. We don't need to speculate in that. That's for sure. But so I saw mortgage rates hit 7%, 30-year mortgage. And now that looks like they're going to pull back a little.
Well, you know, yesterday that was the big headline, right? The 30-year fix got the 7%. A lot of that is basically off of the 10-year U.S. Treasury note yield. Now, today, yields are down 14 basis points on the 10-year, sitting at around 3.82%. But overall, I mean, the 10-year was basically at 4%. So that's pulled back. And also the highly talked about now 2-year Treasury note yield is backing off. That's down 15 basis points at around 4.15%. But remember, the Fed funds rate, which is what the Fed does every time they have a meeting, they raise that, or lately they've been raising it. In the past, they lowered it. That has to catch up to the 2-year. So they're roughly right now sitting at around 3%, 2.75% to 3%. So they need to get to around 4.15, 4.25, maybe even a little bit more. So they're still well behind the curve. But the pullback in yields today is certainly helping the stock market. And again, we know that the UK intervening today. So the theory is that, you know, our central bank, it will likely do something and start to try to weaken the dollar and maybe get yields to go down. So I don't really know what they're going to do. I don't think they can do much personally, but it's the market's theory today. And the markets were due for a technical bid, and so far they are getting one today. So we'll see how it plays out.
All right. Well, it's going to be interesting no matter what happens. Apple mentioned had been getting pounded earlier in the day. What's it doing now?
Yeah, Apple's come off of its worst levels. It's still down over 3%, though. Earlier it was down by more than 4%. Right now it's trading at around $146.89. That's a decline of nearly $5 on the session. But it looks like a Bloomberg report earlier was Apple is scrapping its plan to increase production of the iPhone 14 from its original forecast of 90 million units due to weaker demand. Now, Apple is a mega cap. It carries a ton of weight in the major indexes. It's in the S&P. It's in the NASDAQ 100. The weighting is huge there. It's also a Dow component as well. And it can be viewed very much as a sentiment indicator for many, many people, including myself. So this is just telling you right off the bat, if Apple's demand for iPhones are going down, what's going to happen to the companies like suppliers for Apple? You have so many of them, whether it's a Cirrus Logic or it's one of these other type of chip companies that go in there, or somebody that makes another component for it. So again, it affects a lot of different areas, and it's just a sign of the times, really. Apple warning about that. That's probably their primary product.
Yeah, of course. Really, Apple, their phones and their tablets, really, they're kind of an also-ran when it comes for computers, even though I've been using Apple products for years. Their watches, to a lesser extent, that's really the company when you get down to it. I always said, remember I've said it before, that buying Apple stock is basically buying a futures contract on future iPhone sales.
It really is. And, everything stems off of that. Their whole ecosystem is really built on the apps and built off of that iPhone. So, we're seeing that they're basically saying that demand is really not there for the new phone. That's basically what they're saying. And we've been getting a lot of warnings from FedEx last week, and we've had Huntsman and so many other companies starting to give warnings. And, we're going to have earnings season coming up in a few weeks once we get into middle of October. And we're going to, start to see a lot of companies warning there as well. So, right now, enjoy the bounce while we have it. I don't think it's going to last all that long.
Hey, so iPhone 14, honestly, there is nothing compelling about it other than the fact it's got a really kick-ass camera that's even better than the old one. But for the average person, the old one was fine enough. You didn't need a better camera. Nobody's buying a new iPhone because it has a great camera unless you're a professional videographer. Otherwise, you just say, hey, I'll wait till they got something better that comes along. And then the older phones seem to last better than they used to, especially the batteries. So really looking at it from the consumer standpoint, I see no reason to go upgrade to an iPhone 14. And the market apparently at this point agrees with us, Nick. But one thing that happened in the U.S. and probably around the globe is that iPhones are now outselling Androids, all right, of every manufacturer. The market, I think Apple's got over 50% of the smartphone market for the first time ever. So they're growing their market share. Well, they might not be growing their sales number.
Well, that's a great point. That's a great point. But if you're a guy like me, I'm still using the old Samsung. When this thing dies, I'm going back to the flip phone. These phones are just getting too creepy for me. They just know too much. They listen to you. They're just too creepy. I'm going back to the flip phone, and I don't even want any connection to anything.
Well, my iPhone tells me what to think, and I listen to it.
Well, you have an Alexa now, you have a Siri now. I mean, who's coming along next? I just don't want any new women in my life.
Yeah, well, the thing is, like, Siri is like a elementary school dropout. She's completely useless for all but the most basic information. Alexa looks like she might have gotten her GED after a struggle. And as far as the Google Assistant, I don't know. Yeah.
She went to night school classes
Yeah.
there. Yeah.
She really worked her little butt off, but finally got it. So she's a little more useful than Siri, but not by much. So much for AI digital assistance, that's for sure. Hey, gold today. So gold had been getting slammed for weeks. And then the past few days, it's kind of coming back to life, right?
Well, I gotta say, it's really today. Even yesterday, gold was weak by the close, and today it's soaring and roaring. We have gold futures right now up 1.5%. That's a pretty significant move for gold futures. Normally don't get a move that strong. So the trend is still down, but gold is getting a big bid today. You also have my favorite, which you know I love, silver. Silver's on fire once again today. Silver's been the play. And then gold miners are roaring up 5% today. So you got a really strong move there. Junior miners are very strong today as well. So everything in the precious metal complex is making its move. And mark my words, Kerry, very soon you're going to start to see the money flowing into these things because people are going to say, hey, the currency world is so out of whack. It makes no sense. I want the currency of all time, and that's precious metals.
Oh, you mean it's not Bitcoin? I thought Bitcoin was the king of currencies.
Well, Bitcoin, not for me, but today Bitcoin is actually making a comeback. It was a little bit weaker earlier today, and now it's come back a little bit. So it's living to fight another day, sitting at around that 19,300 level. But you know, the bigger trend in Bitcoin, Kerry, you know where that thing is going. That's still got a long way to go. Sub 13,000 is my forecast for it.
All right. So now looking at this thing at Bitcoin, it's almost at its it's 2017 high, December 2017, which was 19.7. So is it going to bump up against there, go up a little bit, and then dive again?
Yeah. So what you do is if you're looking at, say, like a weekly chart of this, and that's what everybody should do, look at a weekly and a monthly chart, you'll see that we're in a range, and we've been in that range. You could make a case since early June. And what it's doing is it's just trading in a range. But when you move it over to a bigger time scale, say a monthly chart, this is what we call a bear flag, bear wedge, and that is going lower. Ultimately, it's just buying some time over here. Nothing goes down in a straight line. Once that pattern completes itself, you'll see this go down to around, I'm going to say sub 13,000, at least a $13,000 pierce. And that, you know, will be your next big support area for a bounce.
All right. Hey, where do you go find a monthly chart for Bitcoin and other stocks and stuff?
Well, I have it on my software. So, you know, I could pull up anything in the futures market. I can pull it up already. And that's what I use. I use the Bitcoin futures. But if you go to any kind of a website, charting website, and you punch in BTC, you may be able to get multiple time frames of that. But I would encourage everybody to look at a bigger time frame of Bitcoin, most likely the monthly, and you'll see that pattern, how it is forming, and ultimately telling us another decline is coming shortly.
All right. That is fascinating. Those charts are amazing. You know, if you don't know what you're looking at, it looks like a foreign language. And even if you do know what you're looking at, if you don't know how to look at it the proper way, it's a challenge. So I urge everybody go over to inthemoneystocks.com. You'll learn how to read those charts and actually get actionable intelligence from price movements. Nick's been beating the averages for decades. Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. Your emails are welcome, kl@kerrylutz.com. Feel free to leave your comments on the YouTube channel as well. We'll pick some up at some point in the future, and we'll go over them. For right now, I'm sitting on a bunch of questions, but go ahead and send them. We'll get to them and tell us, what are you doing here? How have you adjusted your trading strategy for the new economic realities? We'd love to know. kl@kerrylutz.com. Nick, we'll talk to you on Friday, and good luck weathering the storm.
Thank you, Kerry. Sounds good.